when you're ready.
There's an old saying, buy low and sell high. And that might sound super cheesy. I mean, we've all seen the movies, right? But it is an accurate, albeit simple, description of investment industry right now. VJ, Mr. Abraham, you are the head of equity investments here at Skycomish Capital Partners. And so you obviously know how to play the game. You know how to win. You know there's winners and losers. And you know how to take opportunities. And that's what we want to talk to you about today. When to take an opportunity. And right now, with the proposition that you have given us of buying an equity stake in grant systems, we don't think that that is the best option. And we won't let you be taken for granted. My name's Brody. I'm here with Cav and Caitlin, and we're here representing Gaurav Sharma, who is the head of the internal accounting department here at Skycomish Capital Partners. So, for this decision and this problem that you have given us today, we've created a mission statement. And so the mission statement is invest in innovative and profitable companies that are capable of creating ethical, technological developments for society. Now, as you can see, we've highlighted innovative, profitable, and ethical because we think these are the three key things that will put your company ahead of the rest and really aligns with the factors that your company puts forward. So, what are we going to talk to you about today? First off, should you invest in grant systems? And we believe that that is not the best idea and the best way to go forward. Because grant systems does have a bit of a history with fraudulent and unethical going forward. As well, what accounting treatments should Skycomish Capital Partners consider when approaching this investment decision and future decisions? And we suggest that you perform a review and investigate accounting treatments, and this will result in sustainable investing decisions and maintaining a high profit in the future. So just going over the decision cycle and how this will all play out, we are the internal accounting team. You, Mr. Abraham, you're the head of equity. You're making the decisions here. And you're looking at buying a stake in grant systems and Melco Corp. So the issue isn't as much with grant systems, but with Melco Corp, as they have had this fraudulent activity in the past. And this is the current state of grant systems. Grant Systems is a security software firm, and they do software, products and services, and financial services, and they only recently, last year, acquired Melco Corp, which is an AI company. So who are the stakeholders in this situation? First off, it's you, Mr. Abraham, and the company Skycomish. And we want to continue to make profitable investment decisions. As well, grant systems. If you do want to purchase an equity stake in grant systems, they will become a stakeholder. And finally, grant systems shareholders, because they want to avoid any kind of issues with the plummeting stock that has been happening in the recent year. So going over the issues again, should you invest? Simple answer, no. We don't think that's the best idea. And how can you approach future decisions? By possibly changing your vision a little bit and investing in ethical companies. Now, the clock is ticking, and now Caitlin is going to talk to you about the financials.
So in order to evaluate any future and this current investment opportunity, we've come up with 3 decision criteria for you today. The first one being ethical, sustainable, and manageable. So we want to make sure that any investments that we're taking on meets these 3 criteria and ensures that we are going to be ethical, that we are sustainable, and we are going to be able to manage that investment well. So looking at our 2 alternatives again, the first one being do not invest in grant systems, which we do recommend, and invest in grant systems. So it's pretty simple alternatives here. The main driving force behind this decision is going to be the performance of Melco and the suspicious activity that Melco has been undertaking. So we obviously recommend that you do not invest in grant systems because of the ethical dilemmas and the ethical issues that Melco is encountering and is causing the grant stock to plummet. It isn't a sustainable investment opportunity because the stock has continued to plummet ever since Grant System has taken on Melco as an acquisition, and we don't have any reason to suspect that it would change at this time and cause that stock to go up. It is a little bit more difficult to manage as well with Melco being associated with Grant Systems because of all this fraudulent activity that is happening. It would cause a lot more issues on your end than we believe is appropriate. So that being said, again, our recommendation is to not invest in grant investments. You're avoiding any ethical issues that might arise, any legal issues associated with that. It's sustainable because you don't have to worry again about those issues and manageable. So one of the first steps that we took was to create a valuation of Melco Corp. Now, Melco Corp was bought by Grant Systems for about $12 billion, and it was recently written down by $8 billion. So it's currently valued on the books at about $4 billion. So we want to make sure that that valuation is indeed correct and see if we need to write down this investment even further. So a couple of assumptions that we have with this valuation is that inflation is at 2% annually. Revenue growth is consistent with the first year of acquisitions, which was 18%. And the discount rate that we have chosen is 18%, which includes a 15% risk factor. So we have conducted a discounted cash flow valuation to figure out what the NPV of Melco Corp actually is. So looking at the cash in, cash out for the first year, it does lead to a negative cash flow in that first year. And by the end of our 5-year analysis and forecast, there is a positive cash flow of $94 billion. However, over this 5 years, the net present value is negative $3 billion. So currently it's on the Grant Systems books at $4 billion, but it actually is a negative investment and should be written down further. This negative NPV prompted us to investigate further and look at why exactly this NPV is so negative. And even looking at the sensitivity analysis of Melco Corp, we did have to do some forecasting in our analysis, so we understand that our assumptions might not necessarily be what you would encounter in the future. So looking at an optimistic analysis with a growth rate of revenues at 25%, the risk factor a little bit lower at 12%, it's still a negative NPV of negative $2.9 billion. So regardless of whether you look at it in an optimistic, average, or pessimistic lens, all of the NPVs are negative, and all of this indicates that this is a very bad investment. So we have conducted our analysis based on that average NPV, and that is the number that we will be going forward with for the rest of this presentation. Now, as Brody mentioned, buying low and selling high does not always apply. It may seem that Grant's stock is very low right now, and it may indicate a good opportunity to buy while it's low, and then hope for that stock price to go up. However, as I mentioned before, we don't believe that there is any reason for us to assume that that is going to rise in the future, because since Grant Systems acquired Melco Corp, the stock price has been consistently plummeting. So we believe that this is because of some fraudulent activity. Although we weren't able to get access to all of the working papers of Melco Corp, we did have access to a short customer list. So pulling from this sample, we've identified 5 different situations here in which we suspect there is suspicious activity. So with the sales to VARs, we suspect that there is channel stuffing, which is offloading excessive amounts of value to value-added resellers ahead of demand. So this means that Melco Corp is selling to these value-added resellers much more than required, and these value-added resellers are returning those goods. So if you look at that first highlighted line there with Decatur, you can see that in Q4 of 2016, Melco sold $765,000 of product to a value-added reseller. Immediately following that in the first quarter of 2017, most of those goods were returned, $685,000, and then again, immediately in the next quarter, it was resold to them for almost the same amount. So when a refund is issued, instead of reversing that revenue that was already recorded, it gets put into a sales return account. So the revenue is actually inflated. It'll be listed as $765 in 2016, and even in 2017, the revenue will still be listed as $690,000. So this is overinflating the revenues and kind of creating the perception that Melco is selling more than they actually are. Another issue that we identified, as you can see in the second line down with Demopolis, in quarter 3 of 2016, there's only $5,000 of sales. However, in quarter 4, there's suddenly $866,000 worth of sales. And that is a trend, as you can see, all the way throughout, where in quarter 2 and quarter 3, there's low sales, and then for some reason in quarter 4, we're reporting all of these sales numbers. So this indicates that either there's timeliness issues with reporting this revenue, or they're overstating the revenue and pushing product out that actually isn't sold yet. Now looking at some of the calculations surrounding this, they recorded a revenue of $6.6 million, but after all those sales returns were calculated, it was actually $3.5 million worth of sales. So that indicates that 53% of the sales that were recorded actually are returns. So that revenue is hugely inflated, and that's a big issue that we'll be looking into. Now after this, there are lots of further accounting issues that we have to look at. There's a lot more suspicious activity that we have to review as well, and Kat will discuss that.
So looking at what Caitlin and Brody both already discussed, buy low, sell high is the mentality. However, although the stock price is low at the moment, this does not matter when you are dealing with unethical companies. And while we recognize that Grant Systems itself does have a lot of great opportunities arising in terms of artificial intelligence and data in the future, this acquisition of Melco Corp can be greatly detrimental to the current success of Grant Systems. So this brings us to the issue of revenue recognition. So under IFRS and US GAAP for 2018-2019, we've identified a few of the main revenue recognition criteria, and we've selected 3 that are the most applicable in this case and in this investment. So with the revenue recognition criteria, first of all, is there a contract that's binding the sale? And in the case of this mapping, we've seen that P is preliminary, the I is incomplete, as you've given us, and then the C is stating that orders have been completed and that you are expecting sales in the future. However, when we mapped this with the previous chart that was showing the other slide, we did see that revenue was recorded at the preliminary stage and at the incomplete stage in quarters 4 and quarters 1 of Marion, and this was not correct. No revenue should have been reported by Melco Corp, and this will also be incorrect on Grant Systems books as a result of the acquisition. So the contractual obligation is clearly not being followed through, as Melco recorded all of these revenues inaccurately and too early. Next, can the revenues be reasonably measured? So this leads us to the question of how Melco Corp went about measuring their revenues in these preliminary and incomplete stages when the order was only fulfilled in the complete stage by their VARs. And lastly, is the revenue reasonably collectible? So this also brings us back to the issue of how Melco Corp would have known that the revenue is reasonably collectible at the stages that it reported its revenue in preliminary and incomplete. Now looking at these, there's clearly either fraudulent or unethical activity occurring within Melco Corp that can greatly be detrimental to Grant Systems as well, and it impacts your investment in Grant Systems if any legal obligations do arise. Next, we've identified the accounting treatment for the acquisition values by Grant Systems. So they calculated goodwill at $6.6 billion. However, as per our analysis, we've calculated that there's actually only a difference of 5.4 billion after looking at the net identifiable assets on Melco Corp's books. So where is the value of $6.6 billion coming from? Additionally, why is the value of $6.6 billion being amortized when it should be impaired? Amortizing the goodwill is not the correct treatment, as it is not a tangible asset, it's intangible. So you do have to impair it if reputational damages do arise in the future rather than amortize it on a straight line basis. Lastly, we've also identified that there is currently a scope limitation for grant systems. The fact that they were unable to collect working papers from Melco Corp does speak volumes about the acquisition, and that was not the right move for them. So the fact that the UK corporate takeover rules are applying because it's Melco Corp and they are in the UK does not matter, because they still need working papers to identify the movements of their financial statements. Next, for the purpose of continuity under audit applications, it does state that Deloitte was auditing Melco Corp and that KPMG is currently Grant Systems auditor, but we were also thinking about the continuity of how long Deloitte has been auditing Melco Corp and whether there have been any rotations in prior years. Now, this leads us to the conclusion that Melco Corp most likely failed a review when this acquisition occurred, but because Grant Systems believed that there was still a great opportunity undergoing in the technology department, that they still went through with this acquisition when it might have not been the most viable option for them at the time. Now, the sky is the limit for you at Sky Comish. So why limit yourself to an investment that puts a barrier right above you in terms of losses and reputational damages? This brings us to our recommendation. So just outlining this twofold recommendation, we do not believe that you should undertake the investment in Grant Systems because of all the previous reasons we described. The accounting treatments may not be correctly stated on Melco Corp's books, and as a result, they will not be correctly stated on Grant Systems books. And then also, we believe that you should also perform your own review to uncover any fraudulent activity occurring at Melco Corp and as a result at Grant Systems. Going over a brief implementation, so we do not believe that you should undergo this investment, but because it did land in your lap as an opportunity and you do have connections at Grant Systems and think that this is a good area to explore investment-wise because it is growing, we have suggested this implementation so that you can do further research. So in the 0 to 3 month period, we believe that you should meet with Grant Systems to discuss the decision and perhaps even work with them to gain access to Melco's working papers so that you can perform your own review. In the 3 to 6 month period, begin reviewing the procedures and applicable assertions such as understandability and whether all the numbers do make sense to you, and also identifying the issues that were previously discussed in this analysis and where they could come from. And lastly, in the future, also using the lessons learned from this investment opportunity to guide your future investment decision making. Now this leads us to Brody, who will wrap up with an investment in risks and mitigation.
Yeah. So we already did discuss the risks and mitigations throughout the presentation, but to go over it again, a risk is the stock price plummets even further. It's already dropped from $40 to $10. And a mitigation for that is to plan meetings with Grant executives to discuss these trust issues and how they can be assisted. As well, if your reputation gets damaged because of investing in this company. As well, the potential legal fees, if they are found out to be fraudulent, there is a possibility investors will sue them of up to $200 million. And finally, there is further suspicious activity, and this can just be mitigated by meeting with Grant to assist in the implementation of controls on Melco Corp. And so finally, the sky is the limit with Sky Comish here, and we believe that it is definitely, we do not want you to be taken for granted. Thank you.
That concludes the presentation. JDC Mitigation.
Okay, Brad, I'd like the fact that don't take it for granted and the recommendations you've given are well justified and there's a component of detail analysis. But maybe BJ Abercrombie, I'm of the passion that I will buy not low, buy low and set high. I believe it buy even lower and then set high. Right? So I'm looking at the other side of the coin, which is if we did buy the ethical reputation and all that is really water under the bridge for now. It's a couple of years, right? Maybe we can improve and we can consider after all the damages we have to pay for, etc. We would come with the reputation saying, wow, they picked up a dying company with such a low shareholder, and they are improving and they're doing much better. Not only that, we get all the clientele of grounds as well, which might be a very productive product.
So our analysis surrounded fraudulent activity. So we are aware that the company is bringing in revenue, so they are generating sales, and there's no problem associated there. The issue is if you want to associate yourself with a company that is clearly undergoing suspicious activity. And I know that one of your criteria was that you didn't want to invest in any companies that were associated with fraud, so that wouldn't be drawn to you as well. And so we believe that with that criteria being the main decision driver, taking on an investment with so many suspicious activities isn't the best idea.
Thank you.
I want to clarify something first, because when I looked at the implementation, it seems like you're approaching to invest as opposed to not investing, and just investing at a later time. Is that your recommendation?
So not quite investing at a later time, more that we recognize that this is an interest of yours going into artificial intelligence and big data. However, we recognize we have the connections and that without working papers, there is actually not a viable, clear fraud path that is assessed. And we believe that there is fraud based on the few items we've seen and that there most likely will be. The implementation is more that you just take steps to clarify that it does exist.
So you want to enter this space. Is it possible for us to, because Melco has been disclosing separately from Grant, and then Grant is also casualty in this situation, is it possible for us to just acquire Grant and just the assets and the business of Grant and have them be old owners take over Melco?
As your organization is an investment organization, you might not have the previous knowledge to deal with the technological industry. We do not think an acquisition is the best route for you to take at this time.
Is there a price that you guys would recommend us to pay? If it's already at all-time lows, at some point the assets alone might be worth more than the market cap.
That is hard to say, as we did not receive Grant's full financial statements. But while looking at the qualitative factors of acquiring Melco Corp, we believe that that is not a great option, as you would be accepting so much liability.
Did you consider how productive Grant was prior to taking over Melco?
So we did also incorporate that as a qualitative factor in our analysis. They have great service lines, they're doing a lot in the technological industry. However, this acquisition of Melco Corp cannot be completely disregarded. It's actually the reason why we do not think it's viable to invest in Grant Systems. If it had not been for this acquisition that would cost a potential $200 million in damages, then it could be an option.
That concludes the Q&A period. Thank you, delegates.